For your self-employed clients, they need to know this one trick that's going to help them save taxes, but also save for their retirement as well. And of course, this is called a SEP IRA. In this video, we're going to go through the details of what a SEP IRA is, so you as an accountant will better serve your clients. We're going to go through some key information that's going to be needed to help us guide us through this whole module. And the first thing we're going to talk about is the who, what, when, where, why, and how. This will help break out the whole explanation of each topic that we talk about. And in this case, it'll be a SEP IRA. We're going to have examples for better understanding of a SEP IRA. We're going to go over what to collect from the clients and how to ask for the items for the clients. And we're also going to go over where it goes on the tax return, so you as a tax professional knows exactly where it is, and you could actually show the client where it is as well. So let's go over the most important items that we need to know about SEP IRAs. And the easiest way to do this is to go through the who, what, why, when, and how. The first thing we're going to go over is the who. And who is going to benefit from a SEP IRA? That's how we want to think about this. And I broke it down to three main types of clients that we usually recommend SEP IRAs to. The first one is sole proprietorship owners, S corporation owners, and partnerships. So in general, these three groups will be eligible for a SEP IRA. So one important thing I do want to mention is that these business owners, they don't have any full-time employees, because if they have full-time employees, it's going to make the SEP IRA contribution a little bit more complicated and possibly a little bit more expensive. So it's important to know that when we recommend SEP IRAs, it's usually for owners who are by themselves who don't have any full-time employees. And I'll go over the details of why later, but in general, if there are full-time employees and they qualify under certain rules, then whatever percentage that the owner of the business makes towards their SEP IRA, they have to do the same percentage to the employees as well. And because of that, it can get pretty expensive, especially if they have multiple employees. Now let's go through the what. And this is simple. It's just the general things of, it's a retirement plan for self-employed individuals. Usually they don't have any other employees that are full-time, and it's possibly a higher contribution limit compared to a traditional IRA. So in general, what a SEP IRA is a retirement plan for self-employed individuals. Now, another thing that we need to know is what is the contribution limits for a SEP IRA. So for sole proprietorships, their contribution limit is going to be 20% of their Schedule C profit. For partnership, it's going to be around 20% of K1 self-employment earnings. And for S corporation owner, it's going to be 25% of their W-2 wages shown in box 1. So let's go through some examples for each one. For sole proprietorship, it's around 20% net profit of the Schedule C that you're able to put into the SEP IRA. So let's just say that the Schedule C net profit is $100,000. That means it's revenue minus expenses minus home office expenses, whatever the net profit is. But in this case, it's going to be $100,000. That means 20% of $100,000, they could contribute around $20,000. Same thing for the partnership. If it's 20% of the K1 self-employment earnings, if they earned $100,000 in self-employment earnings from the partnership, then they could also contribute around $20,000. Now for the S corporation, this is totally different. What it is that we take 25% of the W-2 wages shown in box 1. So in this example, if the S corporation owner has a net profit of $40,000 and W-2 wages that they pay themselves of $60,000, we could only take the $60,000 as part of the calculation. So we could only take 25% of the $60,000. That means it's $15,000. Now, even though they showed a net profit on the S corporation owner of $40,000, this isn't subject to Social Security and Medicare tax. But you'll notice that the W-2 wages, self-employed earnings from partnership, and net profit from Schedule C, these are all subject to Social Security and Medicare tax. So because these are subject to that, it's part of the calculation that allows for the SEP IRA. So that's a good general rule to know, is that as long as there is Social Security and Medicare tax involved, then that's a good hint of whether that type of income is going to qualify for SEP IRA. And in this case, for sole proprietorship, they have self-employment income, same with partnership. And then from the W-2 wages, they are paying Social Security and Medicare tax through their payroll. Now let's go through this example that I've set up. If a sole proprietorship made a profit of $25,000, what would you recommend the client to contribute to? So to do this, we know the rule is that with SEP IRAs, you can put 20% in, right? So in this case, the net profit is $25,000. 20% of that is $5,000. So the max contribution that this client could put in is $5,000 towards a SEP IRA. Now, if we use this example against a traditional IRA instead, so the rules for traditional IRA is that you can contribute up to the earned income, but maxes out at $6,500, and this is just for the current year that I'm in. Of course, this traditional IRA amount is going to change over the years. So in this case, a traditional IRA, if they earn $25,000, the max that they could put in is $6,500. So when you compare this to a SEP IRA where they could only put in $5,000, of course, the $6,500 is going to be more. So in this situation, even though they're self-employed, they don't have to put into a SEP IRA because it's a lower contribution amount. If they want to put in a little bit extra, then the traditional IRA will be the better route to go. So this is an example of just because they're self-employed doesn't mean that they're stuck with SEP IRAs only, that they do have other options such as traditional IRAs. And there's other options beyond that if they want to put even more than what the SEP IRAs allow. Now let's go through the why. And why do we want clients to do this? Why should clients even know about this? And the main thing to let the clients know is that it's a tax advantage, because by putting money into your SEP IRA, you actually save on taxes. You reduce your taxes by doing this. The second reason of why they want to do this is flexibility. Is because with the SEP IRA, they don't have to contribute at the same amount every single year. That every year they could choose how much they could contribute. So that's where the flexibility comes in, because they're not stuck with just one amount that they have to contribute every year. For example, if they have a good year this year and they want to contribute the max, then great. But maybe next year their business isn't doing so well, so they could either elect to not put anything at all, or they could put half, they could put a little bit in there. They don't have to put the full amount in. So this is where the flexibility part comes in. The next thing is simplicity. I want to go over how simple it is to open a SEP IRA, but also to maintain it, because there's really not much to do. Once you open an account, the account's open. And also with SEP IRAs, the great thing is that there are fewer fees. When you compare the SEP IRA to other retirement accounts such as solo 401ks or defined benefit plan, for solo 401ks and defined benefit plan has way higher fees and has an annual reporting that's required to be filed every single year. The SEP IRA doesn't have any of those. It's lower fees, there's no annual reporting, and it's super simple. That's why the simplicity of this is a big advantage of having a SEP IRA as well. The next thing we're going to go over is when. When is the due date? That's important for the clients to know. So the first due date is going to be April 15th of the following year. So if we're working on 2023 tax return, the due date will be April 15th of 2024. So it gives you 4.5 months after the year ends to contribute to the SEP IRA. So it's important to know that just because the year has ended, as long as we haven't reached the filing deadline yet of April 15th, we can still put into a SEP IRA for the client. However, if you file an extension on your personal tax return, this is going to also extend the due date on the contribution for the SEP IRA. So instead of it being due on April 15th, with the extension, it will actually be due October 15th. So one tip I like to give to clients is that if they want more time to figure out if they want to contribute to a SEP IRA or maybe gather the funds for a SEP IRA, filing an extension is a great way to get that extended due date to October 15th. So now let's go over the where. And the first thing I want to mention is that you have to let the clients know that they actually have to contribute the money in themselves. There's no paycheck where, say, like if they work at a company, the 401k will just be automatically deducted from their payroll. It's not like that. With the SEP IRA, clients actually have to take the lump sum and contribute it into the SEP IRA themselves. So if it's a large amount like $30,000 to $60,000, they actually have to transfer that money in themselves. Now to go over the where, the client would have to open up a brokerage account that offers a SEP IRA. Now, I normally recommend to a client, whatever bank that they're using already, that they should just contact that bank first to see if they offer a SEP IRA. If their bank doesn't offer it, then there are many other brokerage accounts that offers it, such as Charles Schwab, Fidelity, and Vanguard, but there are many more that offers it. So definitely look into the fees and definitely look into what company the client feels most comfortable with. The next thing, as an accountant, you need to know is where does it go in a tax return, because you should be able to pinpoint exactly where it is to show the client. And for sole proprietorship, it's going to show on adjustment to income page, which is right now Schedule 1, Part 2. Same thing for partnership, the exact same line. Now for S Corporation, this is going to be different. And with S corporations, this is actually filed on the S corporation tax return and it's deducted on the corporate tax return itself. And where it shows on the corporate tax return is that on 1120S, it's going to show under the expense category called pension, profit sharing, etc. plans. And here is an example of the forms on how it looks. So for sole proprietors and partnership, it's going to be under adjustment to income, self-employed, SEP, simple, and qualified plans, this line item right here. So you put the contribution amount here. And for S corporation, it's going to show right here under pension profit sharing, and it's under 1120S. So make sure you know that. So now let's talk about the how. And I feel this is the most important because this is where we go step by step on how you as an accountant is going to help guide the client to do a SEP IRA. We're going to go through this in more details. The first thing is that we need to know their eligibility. Once we know their eligibility, we're going to calculate how much they could contribute into the SEP IRA, and then we're also going to calculate their tax savings as well. And the reason why I calculate the tax savings is that we can't just tell the clients, okay, you qualify to contribute $30,000 to your SEP IRA, but we don't tell them the benefit of that. Why are they contributing $30,000? It's because by contributing $30,000, they're going to save $15,000 in taxes. Giving a hard number where clients can say, okay, if I put in $30,000 to save $15,000 in taxes, that might be worth it for me, right? So we want to make sure that we're clear with not only calculating the contribution amount, but calculating their tax savings as well, so the client knows how much benefit they're getting from doing this. The next thing is that we want to make sure that we didn't pass any important dates. And after we know the deadlines and that we're still able to make it, we want to make sure that the client makes a contribution and then we add a contribution to the tax return to report it. So now let's go over the details of this. The first thing is determine eligibility. First, the question I ask is, are they self-employed? Do they have a sole proprietorship, partnership, or S corp? If the answer is yes, then we can move on to the next question. Do they have any full-time employees? So if they have full-time employees, this is going to be a little bit more complicated because there are eligible criteria that employees could meet to qualify under the company's SEP IRA plan as well. So one of the problems is that as a business owner, if you have employees, whatever percentage you contribute to yourself, let's just say you contribute the max 20%, whatever you contribute to yourself, you have to contribute to the employees as well if they qualify. So if you have 4 to 10 employees that might all qualify, you also have to contribute 20% of their salary into a SEP IRA as well. So because of this, it can get really expensive if you have full-time employees. So definitely know the difference if they have full-time employees versus no employees. If they have no employees, the SEP IRA is a great plan to let clients know about. But if they have full-time employees, then we actually have to go through to see which employees qualify, how much it would cost for the business owner to contribute on behalf of the employees as well. So there's a whole bunch of calculations on this. For simplicity's sake, I usually only recommend this to clients who I know do not have any full-time employees. Now the next thing we want to talk about is calculate. So we want to calculate what is the maximum allowed and also what is the tax savings. And to do these calculations, it's pretty simple. We talked about what is the max allowed. Sole proprietorship is around 20% of net profit. Partnership is around 20% of self-employment earnings of K1, and S corporation is 25% of W2 wages. Now, I want to emphasize, I use the word around here. So if you see with sole proprietorship and partnership, it's around 20%. And the reason why I use around is because it's actually not exactly 20%. It's closer to around 18 to 19%. But we use 20% because it's easier to explain to clients. It's easier to do the math, so we could always use the word around. But once we do the calculation, we could actually give them a more hard figure of letting them know what the exact amount is. But when it comes to just general giving them how much they can contribute, I usually use 20%. And the reason why it's not exactly 20% is because there is certain other deductions like half of self-employment tax that can be deducted out of the calculation. So it gets a little complicated, but using 20% is a safe number to use to share with clients. The next thing we got to talk about is what is a tax savings, because it's important that we emphasize to the client that by doing this, you save this much, right? So we want to make sure the client knows exactly how much they're saving on taxes. And the easiest way to kind of get the tax savings contribution amount is you take the contribution amounts, you multiply that by the tax bracket, and you're going to include federal and state, and then that's the tax savings you get. So let's use simple numbers. Let's just say the contribution is $10,000, and let's just say that their tax bracket is 25%. So that means that their tax savings, if you take 10,000 times 25%, that's $2,500. So the tax saving is $2,500. By contributing $10,000, you save $2,500 on your taxes, and then the client can decide if that's well worth it for them. So we could tell the clients that they could contribute up to $10,000 into SEP IRAs, but they need to know the important dates, which is they need to contribute that $10,000 by April 15th. But if we file an extension, then it's actually October 15th. Once we know the important due dates, then the client can contribute their SEP IRA contribution by that due date into the brokerage of their choosing. Once the client confirms that they will contribute or already contributed to their SEP IRA by the due date, then we need to reflect it on the tax return. And we need to make sure that we show it on the tax return so that the client can get the tax deduction for it. So in summary, the simplified version is you got to know their eligibility. Once you know they qualify for SEP IRA, you got to calculate how much they're allowed to contribute and what their tax savings is. Then you just got to let them know the important due dates of when they need to contribute it by. The client makes a contribution and they confirm it with you. Then we add it to the tax return. So now let's go into how do we contact clients about SEP IRA contributions, because there's actually a before and an after method. So the before, what this means is that this is the process of where you're just collecting the documents. You are just getting their forms in. You haven't really put anything into the tax return yet. You haven't input anything yet. So that's the before part. And then the after would be once everything is in the tax return and you're pretty much ready for it to be a final review, you have all the figures in, then that's the after part. There's a different dialogue you have with clients when it comes to the after. So in the before stages, we want to make sure that the client knows that there is an option for a SEP IRA if they might be interested in it. So if the client is interested, there are two things we want to make sure that the client knows what we're going to do for them. The first one is, of course, we're going to run the calculation after we prepare the tax return. And the second thing is that we will compare contributions amount for them. So if their allowed maximum contribution is $20,000, we're not going to say only $20,000, but we're going to give them options of, okay, there's $20,000 that you can contribute, which is the max, but if you don't want to contribute that much, you could do $10,000 or $5,000, however many options that we want to give to them, and usually 3 to 4 is good. But pretty much what we want to let the clients know beforehand is that we will run the calculation after we get all the information in and we're pretty much done with the tax return, and that we will give them various contributions amounts so they can make the best decisions for themselves. Now for the after, this is where we get everything in, it's ready to go. We just need to run a SEP IRA calculation. And the way we do this is that we run 3 to 4 different contributions amount and we give tax savings for each one. So let's just say that if they are able to contribute $10,000, we'll say, okay, $10,000 will save you $5,000 in taxes, but if you put in $5,000, it will save you $2,500 in taxes. So we give them different options so they know what they're looking at, and we want to make sure that we are giving the option for the client to choose. That's the most important thing, is that the client gets to choose, okay, do they want to put the max? Maybe they only want to put half, or maybe they want to put 0. But we definitely always want the client to be able to choose. So once we give all the clients all their options, of course, we're going to let them know the due date of saying, okay, this is how much you could contribute. Let's confirm how much you want to contribute. Then this is the due date of when you need to do it by. And if the client needs further instructions, you could always provide them instructions to open a brokerage account. Here is an example of the comparison or the options that we give to clients when it comes to how much they could contribute to a SEP IRA. So here, let's do this comparison. On this line item right here, it's going to be 0, meaning that they don't contribute anything. If they contribute nothing, they're going to owe $176,000 in taxes. However, if they wanted to contribute to a SEP IRA, their max allowed, let's just say they had a really high profit, is $61,000. By doing that, they reduces their federal income tax, they reduce their California tax, meaning that their total balance due is $149,000. So by contributing $61,000 here, they reduce their taxes by $27,000. Then we go into the second option. Well, if you don't want to put in that much, we could put in $30,000, and by doing that, you save $13,700 on your taxes compared to if you were to do nothing right here. So the way we make the options available for the clients is that we take the maximum allowed And then the next option, we just do half. And the next option that we do half. And then usually the last option, I usually do 10,000 just because I feel like anything lower than that might not be worth it, but it's still possible if the client wants to. But this is just more of a general comparison so the client knows what they're looking at. So they could see that, okay, well, the more I put in does mean more tax savings, but do they really have the funds available to be able to do this? And one important thing to notate with advising clients with contribution is that they have to put this money in by April 15th and pay the taxes by April 15th, right? So it's important that the client knows that, okay, here, if they don't do anything, they owe $177,000. But here, if they want to contribute, they're going to owe $148,000 to taxes, but they also have to get out an extra $61,000 to pay for the SEP IRA. So it's important that you let the client know that there will be more money out of their own pocket because they have to contribute to the SEP IRA, but at least the money that they're putting to the SEP IRA is still going to them and not to the government. So after the client contributes, we need to know what is needed for the tax return, because it's important that whatever the client does, that we have to reflect it on a tax return for them to get the tax savings. So for sole proprietorship, we just need to know the total amount of the contribution and ensure the client contributed by the due date, and then we enter it in adjustment to income page. Same thing, for partnership, we just need to know the total amount of contribution and ensure client contributed by that date, and then we just enter that into the adjustment to income page. Now for S corporations, because this should have been handled on the S corp side, on the individual tax return filing, you don't do anything. You don't need to enter anything on the individual tax filing itself. So hopefully they got the deduction on the business side, so that's where the tax savings is going to happen. That's SEP IRAs. And for accountants, hopefully this was a good overview so you know exactly what to share with clients and what you as an accountant needs to do to move it forward to help progress the client into a SEP IRA.